Welcome traders, welcome to another video, and we continue with the fundamentals of trading, right? So in this video number 4, we will be looking at spread, what spread is. Okay, so spread, as the name suggests, is like a gap or difference in something. So the spread in trading is the difference between the buy, that is the offer, and the sell, which is the bid prices quoted for an asset. Okay, so it's just like if you're selling something, someone will offer to buy it at a certain price, and if you're selling, you'll be bidding that is the price which you are willing to accept. Okay, so it's the difference between the buy and the sell, right? The buy and the sell is not the same price, and the spread is the key part of contract for difference trading. This is how both derivatives are priced. Many brokers and market makers and other providers will quote their prices in the form of a spread. You see, so that's basically the commission or the broker's charge for opening a trade for you. Remember, they are in it for business. They're not just going to say, oh, you want to trade with us, come and happy days. No. So some brokers, they will offer you a tighter spread, but they offer some commissions to open each position and all that kind of thing. So you have to look at that, take that into account when you're choosing your broker. But with the brokers which I've listed below in the description below, you can check. They are really good brokers who I recommend. If you want to start off with the trading bonus, you can go for XM. If you want one which is quick for deposits and withdrawals, the fastest I've seen is FBS. If you want one with tight spreads and MetaTrader 5, you can go for Deriv, right? The pick is yours, depending on what you want. But those three are the solid brokers that I've seen. I haven't had any trouble with them. So they will charge you a spread, which is the basically for them to open and put you in the market, right? So that's what a spread is. Like I said, some brokers offer low spreads but higher commissions. Others offer reasonable spreads and no commissions. But with the brokers I've listed the links below, they do not charge you any commissions unless if they change in future. But as of today and as I've seen, there's no heavy commissions or charges, hidden charges. It's basically the spread which you see, okay? And they're quite efficient. All right, so they can change the spread at any time. Every broker does this. And this is how retail traders actually lose money, because you find you find that what happens is that someone will be trading a demo account and they're very profitable, and then they get into a live account and they say, what changed? It is not just your emotions of handling real money that is the change, but one of the major changes is the spread. Because during news events and all different kinds of things, the spread changes, especially if you want to hold a trade into the next day at the the midnight time, Central African time, GMT +2, from 12 when the markets close, New York, waiting for the Asian Open. The spread opens just basically so that you cannot trade at all. So these are the kind of things which you have to consider when trading. That's why myself, I'm a fan of intraday trading and that kind of thing. All right, so let's just look below at two different charts. So remember, just like if you're going to buy or sell anything in life, there's a different price for buying that product. If you want to buy a Mini Cooper, they'll charge you a certain price. If you want to buy a Lamborghini, there's a different price. So the same goes when you want to enter the markets. The pairs, the assets which are more tradable, like how you can say maybe you buy bread daily, the price will be lower. And the assets which have got a higher reward, higher risk to reward, and less tradable, like let's say you don't buy a cake every day, you find the price will be higher. So the same goes, the spread is higher on assets which not everyone is trading and which have got a higher risk and reward. Okay, so this chart on the left, this is a chart, I believe this must have been the euro to the Japanese yen at the time I did it. And if you can see on the chart, I'll just mark it with my marker here. With the indicator I was using, you can see it shows you the spread. So the spread here was 1 pip. Okay, that was the spread, 1 pip, and this is the difference to say that the price is somewhere. Let me just change the color of this. So the price, I'll just use what color can I use? Let me go with yellow, right? So the price is in the middle somewhere here, right? But when you want to buy this, they will not give you to enter at that price. They will, if you want to buy, they'll say, okay, you can buy at the red line, which is higher up. So you will be losing. That gap is the chart. If you want to sell this asset, they will not enter you higher up. They will enter you lower down and say, okay, you can sell at that lower price. So the difference is the broker's commission. All right. So you can see the spread is very tight on this one. I think it was EJ at the time, just 1 pip spread. Then look at this one on the right hand side. This, I believe, was Bitcoin, and look at it at this point in time. Bitcoin was trading at 11.8. I think this was around 2020. And just have a look at the size of the spread. You can see my indicator is showing you there how many pips it is, 2000 and whatever that is. But there you go. This is the gap in the spread. You see that? So it is a lot bigger. So they charge you more on trading this more volatile asset, right? So that is basically what the spread is. It's something you have to consider. Remember, the spread will always open. It can be this low like this on the left, and when it comes to news, when it's news, you can find the spread can actually open to this higher kind of level. This was not a news on the chart I'm showing, but I'm just giving you the example that it can spread from there, and next thing it grows to such a wide spread. Maybe from 1 pip it goes to like 12 pips during a news event, and at times even it will go to 20 pips at the crossover. And how does that affect you? Is because it can actually close your trade and you can lose money. Okay, even though price has not reached there, but the broker has said no, it's too risky for me, so I'm charging more, and whilst your trade is open, they move the spread. So it's very important to remember this, guys, and to see when the conditions when this happens. Like I said, if you stick with us, we will show you how to overcome all of this, and even how to use spread for you to see as an indicator when you're trading. So I hope this was helpful to you guys traders, and I'll be back again with another video. Thanks for watching. Remember to like, follow, share, and subscribe. Okay.
Learn, then earn money online. You control your money. You control the risk and the reward. Start from as little as $10. Stop losing to get-rich-quick scams and pyramid schemes. Learn a legitimate skill of online trading. Already a trader? Stop donating to brokers. Become independent. Stop relying on signals and careless account managers. Learn to trade the market maker way. Take our course and follow the rules of big banks and smart money. Get wisdom. Get understanding. Get wealth. Contact MarketWise Traders today.